Hello everybody and welcome to today's webinar. Thank you for being here. I'm sorry I restarted the stream. We had some technical difficulties with the camera, but now it is working. How are you doing, guys? Are you ready for another attempt at this market? Another attempt to make profit today? I hope you are, because I know I am. We have opportunities to talk about today, and we have things that we need to cover from yesterday. Okay, people, how are you doing? Let me know how is everything with you guys. Very happy to be here with you for yet another day. And first of all, before we go on with the analysis, before we start our analysis immediately without wasting any time, I just need to update the chat link so I can see what you guys are talking about in the chat, and then we will start. Alrighty. Let me see. To copy this. And I need to go. I have to do this every day, guys, because it's always a new link. And I hope it will work. I don't think it's work. Yes, it is now working. So we can move on with our analysis, guys. Okay, first of all, before we talk about our analysis, I need to mention what happened yesterday. Yesterday was the first day in about 2 weeks that we lose money, not make money, which is, of course, it is something normal. It happens in the market, of course, and as long as your winners are more than your losers, you're okay. So yesterday, we were having so much fun recently, making profit, hitting targets, or closing trades at market rate with profit, and we were enjoying it very much. But yesterday we had a stop. We had 3 signals triggered, and unfortunately one of them hit the stop, and very fast. It did hit the stop fast. It was the gold buy signal. Of course, gold is a very volatile instrument, so it can hit your stop in an hour or sometimes even less than that. So, well, it is a part of what we do. Of course, it is something that we have to deal with from time to time, of course. And I'm gonna just show you the results from yesterday. We had 3 signals triggered, 3 orders. We placed orders on 4 instruments on our QTimeFX account. 3 of them were triggered. The one which was not triggered was the pound, because it moved so fast and it did not give us the chance to capture that pretty much expected move to the upside. You know, you have seen my webinars recently. I have been expecting this. But unfortunately, when we started talking about it, it jumped 40, 50 pips within minutes, and we were unable of capturing that move, guys. So for the other 3, yes, we had 3 signals which were triggered, and I'm gonna show you these signals. So yesterday we had 3 signals. We had the long euro at 10.92 triggered. We had the long gold at 83.4 triggered, and the sell dollar yen at 108.91 triggered. Now, for the only one of them which reached its limit or stop was gold, and it was unfortunately it was a stop. And after that, of course, guys, we this morning when I came to the market, I saw that the euro is losing a few pips and the yen is making some pips. So the total is minus 79, 13 pips of profit on the yen, 6 loss on the euro, and the stop on gold of 86 pips. So hard luck, guys. And I promise you, we will try to take these 79 pips again. And we will do that, you know. I'm sure you trust that. I'm sure you believe in our ability to recover these pips which we suffered from yesterday, which was it was a good thing, because you know, from time to time you have to go through this, and when it's within reasonable limits, if it's not 3-digit, I'm fine. If it does not reach more than 100 pips, I'm fine. So we had profit in every day for the past period, but yesterday was the first day in a while, and it's okay, and we can overcome this. So let's hit the charts immediately, guys. I wanna keep my eye on the precious metal. But first, of course, as always, we start with the euro, guys. What is happening to the euro? Yesterday, we tried to break above the resistance we've been talking about, which is in the 1090s. I have shown you that we have several daily highs recently seen in this area, and unfortunately, we even with a push above this area here, as you can see, guys, the problem was that we did not maintain trading above 1090s and went back below it to trade below it. Now, I've been doing some analysis this morning, and I of course, this trend line, we have been following this trend line since yesterday, and it's the rising trend line from last week low, the Thanksgiving low, let me call it, and this trend line is currently giving us support. This is the support that we need to care about for the time being. And guys, as you can see, this trend line is currently running very close to the 38.2 Fibonacci retracement level at 1064. So we are about 15 to 20 pips above that at the moment. We need to keep trading above 1064. If we break below 1064, the euro is going to start falling again. And there is, of course, a possibility for that. Let me show you why. It could be here. This is 3. Actually, and this is 4, and ABC with the B top getting above the top of wave 3. So we do have a 5-wave sequence to the upside, which is good. This is good, but it also means that we can still see now we are currently in the ABC phase of the move. So if this is A and this is B, then probably we'll have a C. However, C, of course, is not, even with a break below this trend line, it's not expected to do much. When A stops very close to 4, C, of course, to the bottom of wave 4, of course, C can and will and is expected to drop below the bottom of wave 4. This is, of course, expected. So we do not want to buy at the support. Now we are going to look for the next support. And when we have A stopping very close to 38.2, my guess is that it will be good to wait for the termination or the end point of wave C at the 50% level. Of course, it can go more than that, but this is my favorite. This is what I prefer. So the 50% is at 1048, and if I see the euro trading at 1048 today, I'm going to buy. The other option that I have is that a break above the 90s, just like yesterday. We did break above the 90s. We had a long at 92. We got as high as 1116, 24 pips of profit, but unfortunately, even with reaching the 24 pips of profit, we were unable to hold on to that profit. And the price dropped back below 111. So now today, if we do the same, if we start trading above 90s, again, we want to be in just like yesterday. So guys, what I'm going to do today is I'm going to give you more than one support. Now support, we do have a support at 64, but I'm more interested in the support at 1048. And the resistance is definitely still in the 90s, 1090s, between 91 and 97, even with this penetration. Don't let this penetration fool you, because we were unable to hold above the resistance and we came back to trade below it. With that, guys, of course, we still are going to use the 1090s as our resistance for today. I'm going to use 91 just like yesterday. And with this information, of course, let me put this here, up here, and start giving you my recommendations for today. The first recommendation for today I'm going to give is that I really believe that we have an A here, and B, and we have a C. Let me outline this for you so you understand what I'm talking about. A, B, probably here, or maybe here. It's going to top a little bit above current levels, and then we're going to have a C, which is, in my opinion, it is going to target the 50% level at 1048. So I'm going to place an order there at 1048 in case the price drops to these levels. If we get to 1048, I am going to long the euro. And this is our first recommendation for today. Sorry about that. Yes. Okay, people. Buy at 1048. Now the stop for this trade, if you want the real technical stop, it must be below the bottom from which the 5-wave sequence started, which is 109.80. So if we place it at 109.60, that is a good stop from a technical point of view, although it's 88 pips, but I'm going for that because I don't want to place my stop above the starting point for the 5-wave sequence to the upside. So 960, that is my stop. Now I'm going to give you two targets, of course, as usual. Target 1, I'm not going to make it greedy, but I'm going to shoot for more profit at target 2. Target 2, for the time being, every day we are focusing on the same level. Remember, in October, guys, we got to 1183. That is a good level for a second target for people who want to wait on the euro. So 1183. But I'm going to give you also a smaller target for you guys who want to get away with 40 pips, 45, something like that. So my initial target is definitely going to be the resistance. It's a very easy choice. The highest point within this area is 97. So to make it around 50, I'm going to use 98. And this is our first recommendation for today, guys. We buy the euro in case it drops to 1048. I do expect it to drop to 1048, but in case it does not, and the euro starts rising from current levels, again, a break above or attempts to break above the 90s should be treated as buying opportunities. Now the question is, of course, we have an area. So do you want to place your long order, your order to buy above the top of this area or above its beginning here, right here? In my opinion, we need to respect the 90s now, even though yesterday it was penetrated and then the price came back. That is, of course, something that lowers the confidence in the 90s as a resistance. But from what I'm looking at, even when you look back at the chart here, here, guys, here, everywhere, you can tell that the euro is facing problems in the 1090s. So I'm going to use the 1090s again as my resistance level. And I'm going to use the Monday high was 91, of course, as a level to buy if we start trading above. And I'm going to use only 5 pips above that. So I'm going to use this level, 1097, 96, as an entry. Now for this, of course, my stop should be below 1048. So I'm going to place it at 1028. 20 pips below this, the 50% level, which is expected to provide support in case we do have a C wave to the downside. Now, you may ask, okay, Munther, you are expecting a C wave to the downside. Why are you not selling? Well, guys, because the overall picture is definitely bullish. Just by looking at this move, I prefer to buy, of course, not to sell. And on the daily chart, on every chart, when you look at the euro, you are finding evidence that probably we are going to move to the upside. And this is the direction that you should favor for the time being. This is one point. But of course, even with a rising direction, we have moves that go up, moves that go down. So we can even have good short positions even when the trend is up. I know that. I don't prefer it, but I know it can happen, of course. However, in this case, we do not have a lot of room to sell here because we have the first support at 64, the second at 48. So they are 16 pips apart. If we had, for example, 50 pips between these two levels, then penetrating the first would be a reason to sell. When we start trading, for example, below this trend line, I would recommend shorting, and then we will have a limit of 40 or 50 pips, but we cannot do this here because below 1064, even if we drop below that, even if we break below this rising trend line here, the wave count will not allow for a very strong move to the downside. This is what I expect. That's why I do not prefer to sell in these areas. Of course, anything can happen. It's a market. It can go up, it can go down, and it can go in circles if it wishes. But this is what we believe in. This is what we expect for today. We may come back tomorrow and talk about a drop of 70 or 80 pips on the euro. That can happen. Of course, it can happen. Anything can happen in the market. But is it probable? This is the important question. Can this happen? Sometimes traders ask me this when I talk about a direction with, that kind of excitement that I feel when I find a strong direction in the market. I talk about it like it's a football match. And they ask me, but can it go in the other way? Of course it can. Of course it can. That's why we have stop loss orders. That's why we are always prepared for the market to move against our expectations. But this is not the question you should be asking because it has a very easy answer and it does not help you trade. The question you should ask in order to help your trading is this. It's not, can this happen? It's, is it probable to happen? If you ask me, is it probable to see the euro trading 80 or 90 pips below current levels? I would say that's very, very hard to imagine. I don't think that will happen. But if you ask me, can it happen? Of course it can happen. And now if you ask me, do you think that the euro is going up? Is it probable? Of course it's probable. So always go with the probable question, not the possible question. Anything is possible in the market, but what is probable is what you should follow because technical analysis deals with probabilities. This is a major concept in technical analysis. We deal with probabilities. We know that these moves in these patterns prefer one direction over the other, prefer one side of the other in the market. And we need to follow what these patterns, what this price behavior is indicating, the probable, not the possible. Okay, guys, I hope you understand what I'm talking about. So we're going to follow the probable, and the probable for the euro, that even if we drop to the 40s, the probability is still to the upside. So I'm not going to sell here. I prefer to buy. That's why I have two long orders today. One in case we start moving to the upside, and one in case we drop to the 40s. And as always, guys, when we have two orders in the same direction, once one of them is triggered, you need to cancel the other. I don't want you to be carrying two positions in the same direction at the same time, because that is double the risk that you should allow for. So let me give you targets for this move. Target 2 is 1183. Again, of course, we do have a retracement level just above that at 1208. We can use that, of course. When we get to 83, getting to 1208 will become highly expected. Or even when we get close to 1183, we will be expecting the price to go as high as 1208. But I'm focusing here on the first target. It's more important. I want to give you something up to 50 pips, not more than that. So I'm going to look for a target. Maybe for this we need to switch to the 4-hour chart, because recently we did not reach that high. I'm really interested in this top here, which is, I think it's 40. Yes, it's 40, 40 point something. This is an old recommendation. So 1140, it's 40 point something, so I'm going to put it at 41, 45 pips of profit on this recommendation. And these are the two recommendations for today I'm going to go with for the euro. One of them, of course, when one of them is triggered, guys, you need to cancel the other order. We don't carry, I'm talking about you guys. Maybe I do on my own. But for this stream, guys, for you, for my fellow traders who are following these recommendations, I don't want you to be holding two positions in the same direction at the same time. So once one of them is in, you go to your QTimeFX live account and you cancel the other order. Okay, people, so let's do that. I'm going to have two buy orders. One of them is buy stop, one of them is buy limit. So the buy limit first is at 1048. Our stop, we said, I think 60, 960, yes. And our limit is around 50 pips, right? I think, right? Yes, so we place. There you go, guys. This is our first order for today. Buy euro at 1048, stop loss at 960 with a limit at 1098. Now the second order is going to be, of course, the buy stop. If we start moving to the upside, I want to be long the euro at 96, 1096. My stop, guys, is 1028, 20 pips below the support at 1048, 1028, and my limit is 45 pips at 1141. We obviously have some kind of resistance there, starting at the 40 level and stretching up a little bit. So at the beginning of that resistance area, we are going to place our take profit and place. And this is our second recommendation for today, guys. buy a stop at 1096 with a stop loss at 1028 and take profit at 1141. Now I'm not gonna waste your time with a short recommendation, because I do not believe that we should short the euro unless it breaks below last week's bottom, which was 980. And obviously we are more than 100 pips above that at the moment. So in case something really strong, really important happens in the market today, it will be very hard to imagine the euro reaching a sell signal that has its entry at 109.60. That's why I'm not going to waste your time with a sell signal. I'm going to just focus on these two guys. These are our recommendations for today. This is not new. So you can go immediately to your QTimeFX account and place them, guys. And I really wish you the best. Now, immediately we are going to go to our second instrument, which had an unbelievable day yesterday. It was a very good day for the pound, really good. And first, we're gonna take a look at the indicators, starting with the hourly. Now, the indicators have been in the overbought area for a while, but the market is not dropping, and this is something exciting. As you can see from this wave count, guys, we expected this. We said that we have 3 and 4, and then we have 5, and the 5 came in the form of what we saw yesterday. It was very exciting to see the pound reach these levels, but unfortunately, if you remember from yesterday webinar, we were just opening the chart of the pound and it started moving fast, so we missed out on that chance. It was very easy to make 50 pips yesterday with the first target, of course, and maybe if you wait for the second target, more than that, because we got to 31 yesterday, guys. 31 for the first time in quite a while. So we do have a 5 here. We do have another push to the upside. The indicators, I want to see the indicators. Maybe if the pound continues to close in red candles here, a cross here at the MACD will take place and the price will start falling again. That also is indicated by this kind of behavior in the RSI. So I think we need to be careful about waiting for more at the time being. Of course, eventually the pound depends a lot on political issues, Brexit and the elections there. But from a technical point of view, we are expecting dollar weakness all over the board. So it will be a surprise, let me say, if the pound does not reach higher than it already did. It is expected to go higher, but maybe not now. Why am I saying that? Because of these observations on the hourly chart. Signs of weakness are starting to appear. And with, as you can see, we are closing in the red. As you can see, guys, 3 hours in a row. That is not a good indication. However, we are gonna still look for the support and resistance, of course, which when we break one of them, we know more about the market direction. Okay, people, so before we talk about support and resistance, I want to take a look at the indicators for the 4 hours and for the hourly charts. Again, for our chart, the RSI is pointing lower from a severely overbought level, which was not reached for a long time. As you can see, we got to 90 here, 91 actually, and if you go back to recent history, we do not have 91 at all. So we need to be careful. What about the daily? The daily chart is still looking okay. It is, let me just remove all drawing tools so we can see this clearly. It's still doing okay. The RSI is pointing to the upside, stochastic is pointing to the upside, and the MACD is probably going to cross, although it's not from an oversold area, but there's a cross just about to happen. Did not happen yet, but if we have a good day today, it is going to happen. So if we get this cross with a good close today, that means that we have reasons to believe that the pound is going higher. So with this mixed picture, some weakness signs on the hourly chart, which are obvious, but good health on the daily chart. What do you think will happen? What do you think will happen? Of course, guys, when we have this kind of mixed signals, this is not analysis, this is logic, this is common sense. If we have some weakness signs on the hourly chart, but a healthy situation on the daily chart, that means we should expect a weakness to happen in the next few hours, but not in the next few days. So what is probably going to happen is a little bit of a retreat. Maybe then we will find support and start moving to the upside again. And I think this is what will happen, but I will need to go to the hourly chart and look for support and resistance levels. Enough with indicators. Now, with such a sharp move, it is hard to draw trend lines, but I'm going to try. I can color this. Okay, guys. I'm going to clone this. This is a technique that I always use, always depend on. When there is a sharp move, I create a channel, not just a trend line, and I use the top or bottom of this channel as support and resistance. In our case, it's going to be the top. So we have support here in this area. And of course, as you can see, this area is just a little bit below these bottoms right here, intraday bottoms, around 84, 89, 85, 85, 85. So I'm going to use 85. Of course, this the top of this channel is a little bit above, below the tops. However, it's a rising trend line. So in time, in a few hours, they are going to meet. And of course, we also have this option here to place the trend line on this top, which makes it more likely that 30.85 is the support. So I'm going to use the support for today. The first piece of information I'm going to use on the chart today is that support not working. Yes, finally. Support, guys, is at 30.85. Now, what about the resistance? The high here is 21, and again here it's 20, I guess, 19, so I'm going to use 20. With 35 pips between the stop and the support and resistance, I really believe that we can build a trading strategy with a modest or acceptable number of pips as a stop for both entries. But what I'm gonna try to do for you today is not only short, but I'm gonna try and short, of course, if we break the support and we get the sell signal triggered. What I'd like to see is an attempt. I would like to see us guys attempt a long, just at the right place when we find support before resuming this uptrend. I'm going to try this for you guys. So today signals are going to be complicated on the pound. I want you to watch your account, your QTimeFX account, of course, and follow these recommendations with directions that I'm going to give you. So guys, if we sell 10 pips below the support, that means sell at 30.75. If we place our stop 10 pips above the resistance, that means stop at 31.30. What do you think about that? 55 pips of a stop. That is good. Now, here's the deal. I'm going to give you one target for this sell. And if we reach that target, I want to flip my sell to a buy. I want to reverse my position. Close the sell with profit and then get in with a long position. Okay, guys? So one limit, okay, not two targets like other indicators. This is now, the skill here is to find the level which can satisfy this plan. So in the moving average area, I would love to buy here if we get this low. If we sell at 75 with a limit, maybe, let me see, just 5, 3, yes, 1. I'm trying to count the waves to see which bottom I should start calculating retracements from. So yeah, as you can see, guys, the 38.2 retracement for this move is at 30.34, and it is inside or very close to this moving average area at the moment. So I'm going to use this as my limit. So 30.34. That would leave me with 41 pips of profit on the short position. Now, what I'm going to do, I'm going to surprise you with this. This is the first time. Of course, I've done this before. I do it all the time with my service, my analysis service. But for you guys, FX Educaz, QTimeFX viewers, during these webinars, this is the first time that I do it. So we're gonna sell, and if we get to our target, we're gonna buy. That means, of course, a buy where? Do you know where? Do you know where I will be placing my buy? Buy at 30.34. Oh, it's the target for the sell signal. How about that? Now we're gonna, of course, specify stop, and the limit, of course, initial limit is going to be modest. So limit is going to be, I don't want it to be above 31 unless I really have to. Now this, yeah, these bottoms here around 30.85 make good targets. That would leave us with what, 51 pips? Yeah, okay, not bad. We can still, of course, push towards this resistance at 31.20, but I don't want to do that. I just want to make two quick trades today. Plan to take advantage of a small move to the downside and then a small move to the upside and get away with it. So the stop, guys, for this, of course, we need to be careful with that. I don't think it can be very small. I'm going to use 61.8 because 60 at the time being, 61.8 is above this important, very important trend line. But of course, it's a rising trend line, and we need time, of course, to get to these levels. We can't get to them right now. So if we need 5-6 hours to get to these levels, or maybe we need more than that, little more than that, the rising trend line will be extremely close to this Fibonacci level 2981. So I'm going to use 2981 as the support to hide my stop below. So 20 pips below 21, 2961. Yeah, that makes sense. And I am going to my FX, QTime FX trading account to place these orders. Oh, but wait, we still have, I want to place one more order. Sorry guys, I want to also be ready to buy if we break the resistance. If we start trading above the resistance, I want to be long. And that is, of course, that means buy at 31.30 with the stop, of course, below the 30.85 support, which is at 30.75. It's really complex today for the pound, but I want to try my best to get you some pips. So that's why it's a little bit more complicated than usual. And the limit, I'm going to give you one limit, guys. One limit. If we buy above 30 at 31.30, I think we do have a retracement level, a long-term retracement level that can be used as a target for a move to the upside. For that, of course, I need to calculate these retracements, and I think it's 78.6. No, it's 30.70, so it's the 88.6, I think. 32.19. What do you think about that, guys? $32.19. Yeah, it's larger than what we usually use, but it's okay. Okay, people, so now we do have a trading strategy. Now we are ready to use the pound and abuse the pound and beat the pound up to make some profit. So these are our 3 recommendations for today. I'm going to place them on my QTime FX live account. Let's do it. First, the buy at 31. Okay, so it's going to be a buy stop. If we start, or if we continue moving to the upside, it's a buy stop at 31.30 with a stop 30.75. Sorry, 30.75, and a limit at 32.19 and place. Okay, so this is the first order. Buy at 31.30, stop at 30.75, and limit at 32.19. Now the second one is going to be the sell, of course. If we start falling, we are going to sell. If we start trading below 30.85, so I'm going to sell stop. I'm going to sell stop, guys. 30.75. Stop is 31.30. And the limit is 30.34, right? 30.34, yes. And place, there you go, guys. Sell at 30.75, stop 31.30, and limit at 30.34. Now, a buy. I'm going to place a long buy limit at 30.34 itself, the limit for our short position, with the stop at 29.61 and a target at what, 85 we said, right? 30.85. Yes. And place. And with this, guys, we come to the end of the first part. I'm gonna take a short break, guys, just 5 or 6 minutes, something like that. Before I go, I want to remind you that this live stream is sponsored by QTime FX, our favorite forex broker in the whole world, because they are offering you fantastic spreads, zero commission, and client segregated funds. Imagine yourself trading with only 0.4 pip on the euro dollar and the dollar yen with zero commission, guys. This is the great part. And your funds are segregated in one of the top banks in the world, UOB, which is ranked in the 22nd place in the World Bank ranking. And to top that, of course, we now have the promotion everybody's talking about, which is the $500 bonus. Make a deposit of $300 or more and you will be entitled for a $500 bonus, or you can also make a smaller deposit of only $150 and be entitled to a bonus of $250. But to get these promotional benefits, you must contact us at FX_educast via Telegram. Guys, FX_educast via Telegram. You must contact us there to get these promotional benefits. Now I'm going to take a break. When we come back, I'm going to read your comments and we are going to talk about a lot of things, including our a group and channel on Telegram. So wait for that. See you in 5, guys. Okay, guys, we are back. How are you doing, guys? How is everybody doing? Let me know. Let me see your comments. Let me talk to you. And I'm going to immediately go to the comment section of this webinar and talk to you guys because I love doing so. First of all, hi again. How you doing? Let's go. Okay, Paul, good morning, good job. Rotimi from Nigeria, welcome. Welcome, Rotimi, Paul, Mr. Paul, welcome. I'm very glad that you are with us today. People from all over the world are gathering here with one aim, one target, one objective, one goal, to make profit and to beat the market, buddy. Who else is here? Heather. Heather is asking about, of course, our promotions, and they are okay. I'm sure, Heather, the guys from FX Educast, the best team in the world, are going to answer your requests, your questions. If you have any questions, please let me know. Let us know, and the guys from FX Educast are going to take care of that definitely. Blaine is also talking about the bonus. Your friend wants the 500. Bring him over, buddy, and they will thank you for the $500 bonus, of course. But don't be greedy and ask for a share of the 500. Okay, let them spend them the way they want. Michael's, of course, it's a good deal when you have a bonus of $500. That's a good deal. And Nick, I'm very happy that you, man, got the bonus. Very, very happy for that. That's great, buddy. Juliet, oh, that's quite a name. Hi to you. Heather, are you into NASDAQ? Do you want me to take a look at it? Let me know if you do. Michael is okay, and I'm very happy to hear that. I fully recovered my loss after Munther signals. Thank you very much for that. Thank you. We have been going through a good period. We're making some good profit. You can forgive us, and Nick, of course, buddy. Nobody in the whole world makes money with every trade. Nobody at all. You can forget about that. This is not realistic at all. Not even Warren Buffett, not George Soros. Nobody makes money every time. Peter Lynch, the legend in the fund management world. He was the legend. He worked for 14 years with his trading fund, and he was the top, or the fund itself. It was the top fund in the world year after year after year for 14 years. He was unbelievable. And you know what? What did he say? He said, in this business, word for word, in this business, if you're good, you're going to get 6 times. You're going to get the market right 6 times out of 10. You cannot expect to go 9 out of 10. These are his exact words. The man who was on the top of the world when it comes to fund management and investment. He said these unbelievable words. So you cannot expect to win every trade you get in. Yesterday we had a stop, but it was the first stop in about 2 weeks, which is good, right? To have a stop in 2 weeks, I think that's a good deal. And another quote that I always mention is George Soros' quote. He said, it's not if you're right or wrong that is important. It is how much money you make when you are right and how much money you lose when you are wrong. Nobody's right all the time. Nobody at all. But if you control your losses and keep them under control, keep your stop there, you're not the kind of trader who, when the market gets close to your stop, you hurry to your trading account and you want to delete the stop or change it to another level that is far from current market. If you are not this kind of trader, you're going to make it in this business. But if you're the kind of trader who uses no stops, or when the market gets close to his stop, they delete it, or move it away, then you are going to suffer losses more than you should. I mean, the size of the loss will be more than you should suffer. For the same signal, I have given the same signal. When it's good, I have people coming back to me telling me I made 30 pips on your signal, and another telling me I made 80 pips on your signal. It's the same signal. Why am I getting these feedbacks, different numbers, different results for the same signal? Because it depends on you guys. It depends on how you behave. Also, exactly same thing when it's lost. They come back to me, well, I lost 60 pips today, stop it, that's fine. But another comes back to me, another trader telling me that I lost 150 pips on your signal. My signal, I had a stop at 60 or 70 pips. How can you lose 150 pips with a signal that has a stop at 60 or 70 pips? It's not possible. And of course, that is because they kept moving the stop away from the market in hope that the market will come back. Well, that is not a good way to trade. Another horrible way to trade is to add to a losing position. This is one of the worst things you can do to your account. When you are losing, if you buy, for example, gold at 84, 83, like we did yesterday, you see it falling at 80, you say to yourself, well, I bought at 83, it must be good to buy at 80, and you get in at 80, and then you see it 78, 77, and you get in again. So by the time it drops 100 pips, you have maybe 5 positions. All of them are losing money, so your loss is exaggerated. You don't want to do this to your account. It can destroy account in a day. So if you want to follow these signals, you follow them, including the stop. Don't change the stop. Don't give it room, because then you will be under the mercy of your own luck. The market may go back and you will be happy, or it may continue falling and you will be very, very worried about your account. And again, guys, Michael wanted to make fun of me, man. I've been in the business for 19 years. I know that you cannot make money every day. You cannot make money on every trade. You cannot make money on every week. Sometimes you have a bad day. Sometimes you have only one bad trade, and then everything will go back to normal. Sometimes a bad day when you have maybe 2 stops. Sometimes 3 stops hitting, or maybe 2 stops and the other is closed with a loss at market trade, or 1 stop and 2 closed with a loss at market trade. So this can happen. Sometimes a bad week, in a week where you have maybe 10 or 12 trades, maybe you'll have 7 losses, 8 losses out of the 10 or 12. It can happen. Believe it or not, guys, I have suffered 9 losses in a row. This is the record. I have lost 9 trades in a row. This is the worst thing that happened to me. First loss, the second loss, the third, fourth, fifth, sixth, seventh, 8, 9. 9 losses in a row. 9 trades, 9 losses. But of course I moved on. It was a very hard period. I moved on. I made money after that, of course. Now imagine what's my record for winners in a row. 130. So it's okay to lose from time to time. It is 100% okay to lose from time to time, even if it was 9 times in a row, like it happened to me. Because later I made 130 trades in a row with no losses. That's my record. So my positive record is 130. My negative record is 9 trades in a row. But the bottom line, what I want you to understand is that nobody makes money on every trade. Nobody in the whole world makes money every day. Nobody in the whole world makes money every week. Nobody does that. Okay, so you gotta go through a bad trade or a bad day or a bad week, and it's a part of trading. Of course, if you have the power and the knowledge and the preparation to take advantage of this market, you will overcome a stop or 2 or 3 or whatever it is. You will overcome that and you will go back to the winning areas. With this, guys, I'm very glad to chat to you. It's always fun Always a pleasure, especially with you guys who like to make jokes to have a nice atmosphere between us. I love having this with my viewers, with my clients, with my trainees, with everybody. So with this, guys, we now are going to head to the charts for our second hour. Is that poetry? Our second hour. I think that is poetry. So let's hit the precious metal, guys. What happened yesterday? What happened yesterday? The price dropped. That's what happened. We bought, we were stopped out. It's okay, it's no problem. This is the move that stopped us out. It was very sharp to the downside. But one of the best things that I can notice here, even though with the stop, I'm still full of hope because this is what I see, guys. I have asked you this before, I'm going to ask you again. Who here uses Elliott wave? Who here knows how to count the waves? Let me know in the comments. If you can count waves, let me know. I like this very much. I really like this. But to give it more confidence, I want to use retracements. I'm going to see if the bottom of wave C is close to one of the most important levels or not. Yeah, not quite well. I was thinking that it will be very close to the 50% level. Now the bottom of wave A is very close to 38.2, which is good. That further confirms that this is corrective, because when a move stops very close to a retracement level, it is corrective, guys. And this is what has happened here. A drop after 5-wave sequence to the upside stops very, very, very close to the 38.2 retracement level, which of course indicates that this is corrective. Now, this is probably a part of correction. It is. It's not probably, because we reached lower, so it's only a part. And then we had a B wave to the upside and then a C wave to the downside. Now, can C wave go lower than that? Well, it has to be really, really extended to reach to the bottom of wave 2, because after penetrating wave 4, we need to care about the 38.2 or the 50% level. We got to the 38.2, but not to the 50% level, which leaves us in a position to count a C wave like this. I really hope not, but it is a possibility. I'm going to show you what I'm talking about. C, of course, comes in 5 waves. And the correction itself, according to Elliott wave, sometimes terminates very close to the bottom of wave 2 of the previous move to the upside. So sometimes very close to the bottom of wave 4, and it's more common, or the bottom of wave 2. In the middle, I really care about the retracement levels here. So is there still a possibility to move lower before we move higher again? Yes. Where is the support that I don't want to miss this? I like this wave count. I'm going to keep it. Maybe like this. I really hope not, but it is a possibility. So I'm going to use this chart here. To specify support. And I think we do have support here. We do have an obvious support. As you can see, guys, we have a rising trend line, which is very close to the bottom of the moving average band. And they are both, very close to these bottoms right here. I'm going to consider it to be at this bottom right here, 73.7. So support, $73.7. Okay, what about the resistance? So we can start building our trading strategy, of course. It's obvious that we have something here in this area. That's why I'm going to calculate retracements for the last part of the move and see why are we stopping in this area 3 times. And I think I know why. Yes. We are stopping in this area, guys, because it's very close to the 61.8 retracement level at 77.8. And that's why our resistance is going to be 77.8. I'm going to keep it simple today. A break above the resistance is a buy. Break below the support is a sell. So a buy if we break above 77. Let's consider 10 pips above that, 78.8. Now the stop should be 10 pips below that. Let's see. Of course, I may adjust these numbers depending on the distance between stop and entry. So it is 61 pips. What do you think about that, guys? Yeah, I think it's okay. Now targets, target 1, target 2 for gold for the time being. As I said yesterday, it is going to continue to be 1495.9 until further notice. Now, what about target 1? I want to give you something, guys, that is not very far. Of course, I know you like that. And in this case, I think yesterday high would be a perfect target. 84.1. 84.1, 63 pips, yes. And we are done with our buy signal. Now, what about the short? Of course, I want to be selling if we start trading below the support, and that of course means 1472.7, just like the stop for the buy. So sell at 1472.7, stop at 1478.8, and 2 targets, target 1, target 2. Target 1 is going to be, of course, we need something that is not very far. I will really have to go to that hourly for our chart. Dropping, of course, dropping below this level would leave us correcting the what might be wave 3 here. I think that this might be wave 3. So 4 should not travel a lot, maybe 50% max. 50% of this wave, which is 68.8. That's a very small target, to tell you the truth, but I'm going to use it. Because I believe in the chart, guys. Even if I did not like it very much, only 39 pips, that's not the kind of target I was looking for, but I'm going to use this target. Now, the second target should be the bottom of this wave, wave 2 within wave 3. The low here is 59.7, so I'm going to use 1459.7 as my second target. And there you go, guys. There you go. These are our recommendations for gold today. If we are currently trading around 75.70, so we are almost exactly in the middle between these two levels. We need to see some action to the upside or to the downside before we can decide on which direction we should follow for today. A drop below our support 73.7 is a reason to sell. Penetration above our resistance 77.8 is a reason to buy. And that's why I'm going to head to my QTime FX account and place these orders immediately. So buy at 78.8. It's of course a buy stop. My orders are always, my entry orders are always, or almost always, not always, but almost always, buy stop or sell stop orders. So we're going to buy at 1478.8. Now my stop is going to be, to make sure, 72.7. And my limit is going to be the target one, 84.1. 84.1 and place. There you go, guys. Buy at 78.8, stop 72.7, and take profit at 84.1. Best of luck, best of my wishes to you guys. We still have a short sell, of course, stop. It's going to be sell stop. Sell stop is going to be a reverse to the buy signal. Sell at 72.7. Stop 78.8. And a target 68.8. Yeah, it's a very small target, but I'm not gonna push it beyond that. And there you go, guys. Sell at 72.7. Our stop 78.8 and our limit is 68.8. What a coincidence. 78.8, 68.8. Okay, guys. So with this, we conclude our gold analysis and recommendation for today. And you cannot talk about gold without talking, of course, about what the dollar index. I want to take a look at the dollar index, see what's happening there. We don't have recommendations on the dollar index. We only have support and resistance levels, which I really hope can help you guys in identifying the chances of the dollar moving up or down. So I want to take a look at the indicators. And as you can see, guys, the dollar is not having a very good time, which is exactly what we have been expecting for a long time now. This move looks very, very nice to the downside. We have been trading below the moving average band for a while, and we have found resistance very close to it twice. And as you can see, we are starting another red candle, which means that the dollar is still expected to go lower and lower. The indicators are also pointing to the downside. Stochastic, RSI, both pointing to the downside. I want to take a look, of course, at other time frames. Now, on the 4-hour chart, it looks like oversold. So it might bounce a little bit. Here again, the stochastic is in the oversold and it changed direction. Also an indication of recovery attempts. Can the dollar do that? We'll see. Now about the daily, as you can see, the dollar is going through a period of losses every day. Red day, red day, red day, red day, and so on. And this is expected to continue. Of course, not entirely in a straight line, but it is definitely expected to continue. Even if it recovers a little bit today, that will not change the overall very bearish technical outlook. And one of the things I really want you to see, guys, is this wave count. Sorry about that. Yes, I really believe in this wave count, guys. I really do. And I talked about it several times recently. This is very bearish. And not only that, of course, we also have a retracement level very close to these tops, which adds, as you can see, guys, wave A stopped very close to the 50% level. Wave C tried to reach the 61.8 but failed, and after that the market started dropping. Now, what I said yesterday, I'm going to repeat saying today. When you have a 5-wave sequence pointing to the downside and then a 3-wave sequence pointing to the upside, stopping very close to a retracement level, that is very bearish, and that indicates that we are in the process of making yet another 5-wave sequence to the downside, similar to this one. Similar to this one, guys. We do have a move to the downside, and of course 5 waves. Now what I expect is 5 waves from here, and as they unfold, of course, we're gonna update the wave count. Say like this. No. These are, of course, not exact levels or projections of the waves. I don't know what's the problem. Yes. Gonna show you what I mean, guys. What I really believe is that we have started a 5-wave sequence at the top of wave C here. And from this top, of course, a drop of wave 1. Then, of course, we're going to have to go through some kind of correction, maybe sideways, maybe sharp, we'll see, before we have the best part of the dollar weakness trend, and then another correction, and then another push to the downside. Now, what I really believe in is that this drop is going to be at least equal to the size of this drop. And this drop started at 99.67. We dropped until 97.11, 250 pips, almost 250 pips, 256 pips if you want to be exact. Now, the drop from the top of wave C is expected to be as much, and that is a minimum, guys. Why is it a minimum? Because this whole 5-wave sequence to the downside can be considered wave 1. Okay? Now, this correction is wave 2. Let me label them wave 1. Wave 1 is this. You know, this whole drop is wave 1. This recovery ABC here is wave 2. And if you know elite waves, you know that wave 3 is usually, it's not a rule, but it's what usually happens. It's usually the strongest of all waves. So it is very rare to see wave 1 larger than wave 3. It can happen, of course it can happen, but I can assure you from my own experience that maybe 85%, maybe 90% of the time, wave 3 is at least equal to wave 1 or larger than the size of wave 1, not less than wave 1. So with this concept in my head, I expect the price or the index here to drop from this top, the top of wave C, at least 256 pips. Here the top was 98.54, so that would leave me at 97.98 as a target. So my minimum target for the next 5 wave sequence is minimum target for the next 5 waves is is 97.98, guys. This is the absolute minimum, and currently we are at 97 sorry, not 97 95, sorry, 95, 98. So we are talking about levels that are here, guys, here. So this is the absolute minimum size for the wave sequence that already started and is pushing to the downside. Okay, with this in mind, we still need to find support and resistance levels. These support and resistance levels will help us estimate if we are right or wrong about this expectation. So I'm going to use the hourly chart. I'm going to start drawing my lines. I don't know, guys. It's a very sharp drop. It's very hard to contain within a couple of trend lines, but I'm going to try. What if we draw it like this? This falling trend line is currently around 97.85. This top here is very interesting because 1, 2, 3, 4. This can be 1, 2, 3, 4, 5. Yes, and ending diagonal. So this could be the top of wave 4. Usually, it's a very interesting target for corrective moves. So high is here as 97.94. This is going to be my resistance. Without breaking above this level, currently we are trading almost 40 pips below it. That means even if the dollar recovers, the dollar index recovers 40 pips, even if it does so, we still cannot expect it to continue moving to the upside. The dollar can try and push, but without breaking above 97.94, that would mean nothing. So what about the support? The support is very hard to identify here because we are already, of course, below these bottoms here, this one and this one. And we cannot calculate retracements for an ABC together, all in one. So we have no option but to use these bottoms right here. And from what I see, I prefer to use the lowest close, not the lowest low, because we have a shadow in this area. I don't really care for it, so I'm going to use the close, the lowest close, not the actual low. The lowest close here is 48, 97.48. We are trading less than 10 pips above that. And it's a coincidence that we have, no we don't. I thought we had 50 pips exactly between support and resistance. No, we don't. There are 46 pips. Okay, guys, so now what we want to see is, of course, a break below the support. This support right here. I'm going to show you where is my support and resistance. This is my support, not the actual low, but the lowest close. And this is my resistance. The top of wave 4. even if we try to recover, even we try to push above the moving average, above this trend line, don't let it fool you. We might see trading above this trend line only to top very close to the top of wave 4 of 1 lesser degree, and then boom to the downside. So even if we are going to have wave 2 from current levels, it's going to be something like this, not something like this, something like up to here, here in these areas. Now, one of the things that favors the downside is definitely the fact that we have been finding resistance at the moving average band, and it started here. Once we penetrated it with a good number of pips, we tried to recover. We found resistance here, here, here for hours in a row. We tried very hard to push above it here and then gave up, and then boom, 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 boom to the downside. The market was moving in the expected direction until it again started facing resistance in these areas. And the moving average band, of course, I'm talking about the moving average band. Here we obviously have resistance around it, and here we came extremely close to touching it, and in both cases we dropped to the downside, which definitely favors the downside. So in my own opinion, we have nothing to worry about as US dollar bears. We have nothing to worry about. The chart supports our position in the market for one more day, and unless we break above 97.94, we expect the dollar to get weaker and weaker. Now, if the surprise happens and we break above 97.94, again we will be testing, of course, the 50% level that stopped the previous attempts, which is at 98, around 98.40. I think we got to 50 in the best attempt to break above this 50% level, only 10 pips above it. That's not a break. And then we started falling again. So once we break above this level, we need to care about 98.40 to 50. That is the next resistance we need to care about. But if we break below the support at 97.48, that means, guys, that of course the drop will continue, and the next support, obviously we do have the bottom of wave 3 and wave 5 very close to each other, and I'm gonna change to another time frame to check these lows with accuracy. The lowest point during wave 3 was 97.14, and during wave 5 it was 97.11. It's very obvious that they are very close to each other. So in that area we do have support, and we need to care about it just above the 97 landmark, between 11 and 14. We need to care about these numbers as well. So guys, with this, now we know that our position betting against the American dollar is still in good shape. It is still healthy. We don't have symptoms of a dying king here. The king, the trend in today's market, I have been saying this for weeks, and I really believe it is the best trade in the market right now. It is to bet against the American dollar. I really believe it's going down. With this, guys, we come to the end of the second hour of today. I'm going to take a short break again, and when we come back, I want to talk about other instruments, other currencies. The yen, we had only the yen made us money yesterday out of 3 trades. A very modest profit, but it was good, especially on a day like yesterday when we had a stop hit on gold. Yen was kind to us and gave us a few pips of profit. We're going to talk about the yen, of course, and we are going to talk about, I would love to talk about the Canadian dollar. We had a very big move yesterday, and I did not take a look at it because I wanted to do so in front of you guys. I said to myself, well, this is a very good situation to discuss during tomorrow webinar, and we are going to do just that after the break. For the time being, guys, I want to remind you that you are enjoying these free services and this free webinar because of the generosity of our favorite forex broker in the whole world, QTimeFX. The broker who is offering you a leverage up to 500 to 1 who has the award for the lowest forex spread broker of 2018 by the ACI FMA. And that was not a surprise, of course. Just look at these spreads and you know why they got this award. 0.4 on the euro dollar, and while trading yesterday I even saw smaller spreads than that. I saw 0.3 with my own eyes, and I said to myself, wow, that is some good spread. And of course 0.4 on the dollar yen, and similar tight spreads on other majors. This comes of course with zero commission, so we can give you the best trading conditions and the lowest cost of trading. We are trying to cut your cost of trading to the lowest possible. That's why we don't charge you commission. Of course, if you look around on the internet, you're going to find many brokers offering less than 1 pip on the euro dollar and dollar yen, but most of them are charging commissions. And they say, well, the logic behind that is that, well, we are offering you a very good service, we deserve some commission, and that's fine. Yeah, I have no problem with that. But to you as a trader, that is extra cost. If you can cut the cost, that is great. So come trade with QTime FX, because they cut your cost to a minimum. Very, very tight spread and zero commission. And you don't have to worry about your funds, because QTime FX uses segregated client funds and UOB, which is ranked in the 22nd place in World Bank ranking. And of course, another reason why QTime FX should be your broker is that they are the reason why you guys are getting these signals and these recommendations and these analysis sessions for free. They are literally paying on your behalf, so you can enjoy these recommendations and analysis sessions and know what to do in the market and try and get some profit every day. And of course, on the top of that, we have the promotion everybody's talking about, which is the $500 promotion. I even had people coming to me on LinkedIn asking me about it recently. Everybody's talking about it. People on the chat here are talking about it. It is such a fantastic promotion, and that's why everybody is talking about it. $500, guys. But to get these promotional benefits, you must contact fx_educast via Telegram. So do that immediately during the break, and when we come back, I'm going to talk more about this offer and about the market, of course, dollar yen and Canadian dollar. See you in 5, guys. Okay, my friends, how are you doing, guys? How's everybody? Welcome back. Welcome back again to the final hour of today's webinar. And of course, we're going to continue doing the same thing. We're going to continue looking for the best trading opportunities in the market for today. And for that, of course, we are going to immediately head to the chart. First thing I want to talk about is the Canadian dollar. Yesterday we had a big move. We did not give signals for the Canadian dollar in the past few days. I think the last time we looked at it was maybe more than a week ago. So I want to see what's happening here. So I'm going to remove this and start all over again. I want some indicators. Okay. Now, guys, it looks oversold a little bit, but it does not look very strong, because if you take a look at the direction of the RSI, it's not pointing to the upside, and even with the stochastic indicator, even though the fast is above the slow, and they are touching again here, and maybe there will be a cross to the downside pointing to further weakness. But yesterday was very exciting for this pair. It was really, really exciting if you were trading the Canadian dollar. Let's look at the indicators on other time frames. Wow, deeply oversold on the 4-hour chart. Even the MACD is diverging like never before. Look at this. Look at recent history. It's been a while since we saw this kind of divergence between the MACD and the signal lines. What about the daily? Oh my God, the daily is pushing to the downside. We are still not in the oversold areas. The MACD is just about to issue a sell signal. So we're just starting, guys. What happened yesterday looks like just a start, especially that we are today, only today, not yesterday, today, pushing below the moving average band on the daily chart, which is something fantastic for the bears. So we are just starting. This is what I believe in for today. And of course, this goes along very well with our view of the American dollar. We expect the dollar to go down, and this is a dollar pair with the dollar as base currency, so it's really expected to go down. So indicators on everything, hourly, 4 hours, and daily, they are supporting more weakness, especially the moving average band on the daily. This is very, very good for the bears. If you're a bear, then this is good for you. Now, what about a look at the long term? We started this year with the dollar being almost at the top of the whole year, and then boom, 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 and then up and down for the rest of the year. So from the first days of 2019 until we reached until the end of the first month, this is the whole, almost the whole yearly average, or range, sorry, range, not average. We are trying to push below, or we did try to push below the bottom reached on the last day of the first month of this year. We tried to do this hard here, again here, and I am positive that we are on the way to yet a third attempt of breaking below the bottom seen in January, which is 30.69. So 30.69 is important. We are still more than 100 pips above that, but 100 pips is not very far. Yesterday, definitely, honestly, I was not following the news yesterday. on the Canadian dollar. I don't know if it was a central bank meeting or anything like that, or some kind of really important figure. I'm a radical technical analyst. I don't look at the news every day. Sometimes I do, but not every day. But don't do that. Do as I say, not as I do. You need to care about the news. Of course, you need to check the economic agenda. You need to see what is happening, when is there an important figure scheduled, or a central bank meeting, or anything like that. But yesterday, honestly, I don't know what's the reason behind this move, and I don't care. I don't care. I care about the price action. This is what I really care about. So guys, with this being, of course, trading below the moving average band with the target more than 100 pips downside, I'm expecting the Canadian dollar to keep diving. 30.70 is an important support, but it's far. We're going to look for a closer support to see what can happen here. And you know me, you know how much I love my retracement levels. And as we speak, the price is trying to push below the 50% level, which is definitely important for two reasons. I'm going to show you why I really believe the 50% level is important. The first reason is that, of course, it's the 50% level. That is one of the most important retracement levels to me. 50, 61.8, 71.4. These are the retracement levels you need to care about. I know we have more than 6 or 7 other retracement levels. I hardly pay any attention to the 33 or 38 levels. 78 and 88, sometimes when there is enough evidence on the chart that they will be important, I give them attention, but not all the time. So for me, if you want my absolute favorite retracement levels, they are 50%, 61.8 and 71.4. I love these levels, and I know they can be very, very helpful in estimating the chances of a reversal very close to these levels or a continuation in the same direction. So here we can use the 50% level to estimate if there will be a reversal around this level and then going higher again, or a continuation of the current trend. The first reason is that it is the 50% level. The second reason is that we did bottom very close to this level recently. This is November 19th low. It is 31.81. Imagine that, guys. While the 50% level is at 31.84.8. So we're talking about 3.8 pips, guys. 3.8 pips. Can you believe that? We have a bottom that is very, very close to 50% level. And the third reason is that the bottom of the moving average band is also not very far from it. The bottom of the moving average band currently is around 97, 98, while our level is 85. So we're talking about 12 or 13 pips between the two. So we have 3 reasons to believe that 31.85 is an important support. And of course, as you can see, we are pushing below it. We are trying to push below it. We currently are at 77, 78, which leaves us about 7 or 8 pips below our support. 7 or 8 pips, of course, it's not a break. We need to wait for a little bit more to confirm that this level is broken and to have a good reason to initiate a short position. So support is obviously at 31.85. Now, what about the resistance? After yesterday drop, I don't think it's very easy to identify. Initially, I am interested in these levels here. Here, yeah, this bottom right here. And as you can see, we have daily low very close to it here, daily high or 2 daily highs very close to it here, and even here. 3 daily highs here. 1 daily high very close to it, and the bottom itself here, the one I really care about, is 32.60. So 32.60 is our resistance. Now this is initially. I'm going to use another calculation to see if this is an important level or if there is another level that I would prefer to use, and that is the retracement levels for the move up until now from the top seen earlier this week at 33.21. So we dropped from 33.21 to the current market price of 31.77. I want to see the 61.8 retracement, which is at 66, obviously. That's very interesting. That is seriously interesting. So it is very, very close to my resistance here, and I'm gonna use these two levels as support and resistance for today, and I'm gonna place my orders on penetrating either. So if we penetrate support to the upside, the resistance to the upside, that is buy. If we penetrate support to the downside, that is a sell. Let's start building trading strategy. The only thing that is a little bit worrying to me is that we are very, very close to the current, to the support. We are pushing below the support. So we may have to place our sell order very, very close to current levels, maybe at current levels. I don't know if this will be possible. A sell 10 pips below the support, 31.75 would be justified. Stop, unfortunately, it must be large because I need to wait to levels above 32.60, so 32.70, for example. That leaves me with 95 pips of a stop. But of course, this is the Canadian dollar. Its pip value is not equal to the pip value of the euro or the pound or gold, or even the dollar yen. It has a pip value at current prices. It should be around $7.50. So 95 pips on a instrument that has a pip value of $7.50 is like what? It's like 70 pips on instruments which have their pip value at $10, like the euro, the pound, and gold. So it's okay. 95 pips, it is okay. Now, what about the targets? For me, it's obvious. It's very, very obvious for the sell. We are going to target the bottom from earlier this year, this bottom here. I'm really interested in it. We have been trying to break it all year. You know, we go high, and then we dive towards it. Then we go high again, then we dive towards it. So 30.69, that is my target, but that is more than 100 pips. For you guys who don't want to wait that long, I'm going to give you a smaller target. But for me, this is going to be my target for today. And this is the target I'm going to place when I place the order. So it is 30.69, sorry. How about a smaller target, something closer? Let's see if we do have a level that we can use as a target. 30.69. I think, let me see if this is okay. Yeah, 71.4 is very close to this bottom right here. So I'm going to use this bottom at 31.12 as an initial target for you guys who don't want to wait for too long. 31.12. For me, I'm going to use the second target. And because we are very close to market, I'm going to go immediately to my trading account and place this order, sell stop at 31.75. Unfortunately, it's very close to the market. Let me see. Yeah, we need a pip or so. We need the market to move higher a pip or so before we can place it. So let's get ready for that. Stop is 32.70. And the limit is, of course, 30.69. I'm not going to use 31.12 as the limit for today. I'm getting greedy on this one. Why? Because we are just now penetrating the moving average band on the daily chart, guys, and that means something. That is important, and it is supposed to give a lot of energy to the bears. If we manage to penetrate below this moving average band, I don't think it's going to be only for 50 pips. It's going to be for 100 or something like that. So guys, unfortunately, we need to wait a little bit for this order to be placed, because with the market is very close, we need the market to go up a pip or something like that before we can place our order. So I'm going to leave this screen as is, and I'm going to go to the chart to find or to establish my long position, or the order to initiate a long position. So my buy, of course, it's going to be only if we break below 32.60, and that means, of course, 32.70, 10 pips above resistance. Stop is definitely going to be below 31.85, and that means 31.75. And of course, as you can see, the two signals are reverse for each other. I think now we can place our order. Yes, we do. So place at 31.75, guys. And yeah, we have our first order on the Canadian dollar. Sell at 31.75. We are trading at the moment 6.5 pips above that. So maybe it will get triggered even before this webinar is over. Our stop is at 32.70 and our take profit is at 30.69. Now we still have the buy to work at. I'm going to work at this position. We still need targets. I don't believe this will be triggered, but of course you need to be ready for the market. If it moves, you need to be there. If you really believe in the strength of your support and resistance levels, then you should definitely follow the direction of breaks away from these levels. If you break above resistance, even if you believe the market is going down, that's a break above resistance, man. You need to buy. If you believe in your analysis, if you believe in the strength of your levels, you follow them, even if that was against your outlook, let me say, or expectation of the market. So I really believe that 32.60 is an important resistance. That's why if I get beyond 31.60, if I start trading above it, then a buy would be 100% justified, no matter what I think about the market. So buy at 32.70. Now, where can I place my limit? Recent highs. I think recent highs can provide an initial target that is interesting. For example, this one here is 33.21. Is that good enough? 33.21, maybe just a little bit more than that. The highest price we saw recently was 33.28. So 7 pips more, 33.28. That leaves me, in case this signal is triggered and it reaches its target, with 58 pips of profit. Now another target to the upside. Maybe if we calculate retracement for these levels. Yeah, I was extremely interested in this stop even before I calculated retracements, and now to see that 71.4 retracement level is very close to it, I am even more interested in it. Here we have daily highs very close to each other, 34.23, 34.20, and 34.33, with the 71.4 retracement at 37.08. So it's very obvious that once we get just above 34, resistance is there. That's why I'm gonna use 37.08, this retracement level here, as my 34.08 as my limit. So these are the recommendations for the Canadian dollar for today. What I really want you to care about is the support at 81. We are trying to push beyond it, but not 10 pips yet. We have placed a sell at 75. It's not triggered. I think we got to 77, very close to it. We still need a little push to the downside. Currently, as you can see on the chart here, the current price is 81. So we are 6 pips above the entry for our sell signal. 31.85 is an important support. Today's closing is going to be an important closing. If we close well below 31.85, that means we have penetrated the moving average band on the daily chart, guys. And this is a big deal. If it was the hourly chart, the target for this penetration would be 50 pips. But when you talk about the daily chart, we're not talking about 50 pips here, okay? So we're maybe talking about 150 pips, 200 pips, something like that. So keep your eyes on 31.85, and later in the day, if you are trading this pair, look for the daily close. See if it's weak, then this proves that our analysis is good and that we are right about expecting dollar weakness on this pair. As we have been expecting, of course, on every pair, every instrument we have analyzed, we are expecting dollar weakness on the pound, euro, dollar yen, Canadian dollar, and gold. We still have the dollar yen. We're gonna start talking about it immediately after I place this recommendation here. So just in case the surprise happens and we break to the upside and we get to 32.70, I want to buy, and I'm going to use 31.75 as a stop, and my target is going to be 33.28. So this is it, guys. 32.70 we buy, stop 31.75, and take profit at 33.28. One quick note here, you notice that I have used target 1 for the buy signal because it's not the direction that I really expect in the market, but I really believe if we break below 31.85, then this market will continue diving deeper and deeper to the downside. And that is why for my sell signal, I did not use this target, guys. When I placed the order, please pay attention, okay? I placed my limit at this level, 30.69, 106 pips. Keep your fingers crossed. I really need those 106 pips to make you feel great about your trading, guys. And I really believe we can get there if we break 31.85. So let's pray for that. With this, yeah, we are done with the Canadian dollar. Before I move on to the last instrument we're going to talk about today, which is the dollar yen. I want to check. I have some comments here. Raymond is asking about how he can claim the bonus. Of course, Raymond, the guys from FX Educast can help you with that. Please reach out to them using FX_Educast via Telegram, and they will help you with big smiles on their faces. This is our promise to you. Blaine, hey Munther, when is the stream going to become premium? That's not my call. It's up to the management at FX Educast and QTime FX. And I'm ready to do whatever they want. If they want it to be only premium, we are gonna have it only premium. But one thing that we have done this week, and I want to talk about, is the group. We have a group on Telegram. If you want to join this group, please let us know. FX_Educast via Telegram. Contact us there, and we're going to send these recommendations to the group immediately. So even if you did not pay attention at that moment, that exact moment when I placed the order, you're going to find these recommendations sent to you once you join our group. So join the group now, contact us at FX_Educast via Telegram and ask about the group. So this, guys, now we are going to talk about the yen, and the yen, the love of my life. Currently, honestly, anything that moves against the dollar is the love of my life, because this is this is the trend that I expect in the market at the time being, and for the foreseeable future, the next weeks, the next number of weeks, the next number of months. What I see when I think about the market, when I take a look at daily charts on all dollar-related instruments, what I see is one thing. They are pointing to a huge possibility of dollar weakness. The euro, when I look at the euro, I see it going up. When I look at the Canadian, I see it going down. When I look at the yen, I see it going down. When I look at gold, I see it going up. So every instrument I look at, everything is pointing in the same direction. I excluded the pound from that phrase because, you know, it's really uh, politics related. So we don't know what's going to happen in the UK, and it will move depending on what is happening in the UK. But if it follows the same direction as everything in the market, of course, the pound will be expected to go higher and higher in the 30s and maybe even the 40s. We'll see about that. I remember when we were trading above $1.50 before that Brexit miss. It was one of the most exciting nights of my life. I'm sure you guys were there. I did not sleep that night because when the results started coming, we were trading very close to $1.50, 150, and I think we got to 23 by the morning, or 27, 23, in the 20s. So we're talking about a drop that you find hard to believe. Let me show you. It was one of the most exciting nights of my life. But I was, you know, I traded during the day, but I then closed everything because it was very scary. Let me remove alternate tools. I want to show you guys. It was in 2000. I really hope we can get there in on the daily chart. Yes. This is the night I'm talking about, guys. The night when you witness something like this, it's very, very hard to forget. Look at this. The high was 50.06 and the low was 32.30. 32.30. Can you believe that? No, not 20s. 32. I said 23. No, it's 32. So we're talking about almost 1,800 pips in a matter of hours. Of course, all day we were trading here, just here. And then when the results of the Brexit vote came out, we saw this unbelievable move. So maybe, guys, if the pound can follow the direction that everything else seems to be taking against the American dollar, maybe we'll finally, and for the first time in more than 3 years, we will get to levels which we had in the market at Brexit time. On the day of Brexit, we were trading almost exactly at $1.50, 150. So if the pound uses this opportunity when the dollar is not looking very good, I think we can get there. We can get to these levels. And by the way, of course, we have a long at 30. As you can see, guys, now we are at 47. Our signal is already making 17 pips of profit. And I really, really hope we will get to the limit on this one. Our limit is 32.19. So we're going to make some good profit today if this is hit. As you can see, pushing up. This is very nice for our signal. Very nice. Very, very nice. Okay, guys. Back to the end. Everything seems to be working against the dollar these days. And the yen, even with the recent attempts to break above the 109.30s, it's just not working. It's not working. We pushed and pushed and pushed to the upside. The bulls did, not me. I'm a bear. But they pushed and pushed and pushed to the upside, but then they gave up. So this whole move here, almost 35 pips above this Fibonacci level, the 109.37, was only a scare. Okay, guys, one of the things that I really want you to focus on here is the wave count. We want to talk about the wave count, of course. Let me fill the screen with it. Yeah, we do have a 5-wave sequence to the upside, but it is very probable that it's only a C wave. And that's why we were expecting a drop. Of course, the drop happened very sharply. I love what the dollar yen did here. It helped us make a profit yesterday. We made 16 pips on the yen yesterday, and I think 37 or 38 the day before. So the dollar yen is our best performer this week up until now. The drop was very satisfying. However, it started recovering from a place that I wish it did not start recovering from. If we draw a trend line from the bottoms seen in October, late in October, passing by the monthly low of November, we can see that this trend line is running in this area around 108.50. And we found support only pips below that. So only pips below that. That's not good for our bullish expectations. From there, the price started recovering. It got to 91. We expected a visit to the 90s yesterday, and we got it. The high was 96. Our sell was waiting here at 91, and then boom, the price dropped, but not very, very hard. Not in a very sharp way. It dropped only 20 pips or something, 25 pips, I think. That's it. 20 to 25 pips, and then it's recovering. Now, what is worrying me is this. I don't like to see this, guys. I really don't. This is a flat correction, and it's pointing to the downside. So that is an indication that there is still some movement to the upside. But there is one way of interpreting this in a good way, not a bad way for the bears. And this is, of course, that we are in a corrective 5-wave sequence to the upside. Corrective 5? Did Munther say corrective 5? Fives are never corrective. Well, of course they are. I know it's a little bit tricky, but what is the internal structure of wave C? That's a 5. What's the internal structure of wave A? It's a 5. So if this is a wave A moving to the upside, of course it's going to be a 5. But after the top of wave 5, inside this wave sequence, we are going to fall again. Maybe for a little while, and then we'll have another 5-wave sequence to complete a big A, B, C to the upside, and then boom to the downside. So now we're not really excited about shorting the dollar yen from current levels. We need to wait a little bit. I really believe that this top here can be very, very good for a short position. Why? Because this could be the top of wave 4 in the sequence. 1, 2, 3, 4, and 5. Okay, and this, it's getting really complicated. If you're not an elitician, we can count this as A, B. Can B go beyond A? Of course it can. Actually, if you want to hear what Robert Prechter say about that, he says it happens more often than not. So what could be like a really bearish wave count, this wave count here, I really believe it can be very exciting. This is getting really complicated. Even if you were an elitician, things are getting a little bit complicated here. I really hope you guys can follow what I'm talking about. Can you? Is it getting too complicated for you guys? Let me know. I want to see which is the closest to the top of the previous wave 4. No. Yes. Yes. My God. My God, this is something. Okay, guys, so this is a very complicated wave count. After topping here, of course, we started dropping in a 5-wave sequence. Usually the sharpest part of the whole move is wave 3 of 3. This is Elliott. This is what he said. He said wave 3 of 3 is usually the sharpest of the whole 5-wave sequence. And as you can see, I just want to color this in a different color. Maybe put it something light. No. Little darker. Maybe green. Yes. Okay. So guys, 1, 2, this is wave 3 in my wave count. 3 of 3 is very sharp here. And that is an indication that this wave count is correct. Because this is what Elliott said himself. He said that usually wave 3 of 3 is the sharpest part of the whole move. And as you can see, this is definitely the sharpest part of the whole move. And wave 4 topped very close to the top of wave 4 of 1 lesser degree. Another confirmation that this wave count is beautiful. So now, when we have the bottom of wave, the bottom of the whole 5-wave sequence here, and the bottom of B here, if you are not really an analytician, if you know just a little bit about the wave count, you would say that this is a mistake, but it's not. It's definitely not. In Elliott wave theory, they say that wave B, Elliott himself called it a regular wave B. But later on, other researchers who came after him said, no, it's not a regular. It's the regular for wave B to travel beyond the top of, or bottom in this case, of wave 5. So if we calculate our chances here of having a complete ABC moving to the upside, with B being irregular in Elliott terms, in his own words, A, then B, then a C, which is of course going to be made of 5. Just a little bit of overlapping. It can happen in leveraged market. This is what Prester said. And of course a flat in wave 4, another confirmation of the wave count. Fantastic wave illustration here, guys. I mean, if you want to write a book about Elliott, you're gonna take this as an example, as a perfect example of how to count waves. So with this, of course, with 3 of 3 being the sharpest, 4 being a flat, B traveling beyond the extreme of the 5-wave sequence, and wave 4 topping very close to the top of wave 4 of 1 lesser degree. Every guideline is here. Now, what I really expect to happen, guys, is a final push to the upside. This final push may reach maybe the 50% level, or the 61.8. My favorite is 61.8. Why? Because it's very close to the top of wave 4. And wave 4 can be extremely helpful when you are trying to find corrective targets. So if you are in a correction phase of the market and you want to find a target, look at the tops or bottoms of the previous wave 4. So wave 4 here topped at 109.21, and look at this, guys. 61.8 is at 109.22. It's absolute magic. So I really believe that we can get to 109.21 or 22, or very close to that, and then we start falling again. So I'm not going to recommend a short here. My short is going to be at 109.21, the top of wave 4. We also, of course, we can get only to the to the 50% level here, just above 109, and then start falling. But in both cases, what I really expect is a top above the top of wave 3, which is yesterday high 108.96 and a half, 97, let's call it. And I really believe we can get beyond there before we turn lower. So this is going to be my target for today. From this area, I'm going to sell. So I'm going to have a short at 109.21. My stop, I will discuss the stop in a minute. And of course the targets. I'm going to give you two targets. Okay guys, so first the stop. Because this is a 5-wave sequence and I'm trying to fish for top of the correction that follows 5-wave sequence compositions, I need to keep my stop above the point from which the 5-wave sequence started, which is this one here, this high 109.73. So above 109.73, in my opinion, maybe 10 pips is enough. That's enough. 83, that leaves us with 62 pips of stop. Not bad at all. Maybe just to be safe, we'll make it 20 pips. Although I really believe 10 is enough. But 20 is a little bit safer. So 109.93, 72 pips of a stop. Now what about the targets? Of course, when corrective waves terminate, the price will be expected to travel to the other side of the chart, targeting, of course, bottoms that are below the previous bottoms. So here we have the bottom of wave 5 at 108.45 and the bottom of wave B at 108.40. So it's obvious that we have something in the 40s. And as you can see, guys, we do the 88.6 retracement level for this whole 5-wave sequence is at 108.42. So I'm going to use this level as my target. My initial target is 108.42. That leaves me with a good profit, right? 79 pips, not bad at all. Second target, I really remember this from previous sessions. We have a bottom at 107.87. This is it. This is going to be our second target. So this is our initial recommendation for the dollar yen for today. But what if we don't reach 109.21? Maybe the minimum that I need to see is just above this high here, 108.97. So we may get 109, for example, and then start falling. In this case, I want to be ready to take advantage of the drop. And as you can see, we have this line touching here, 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 and very close here, and then again here, 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 3 candles in a row, bottoming exactly at this trend line. So I'm going to use this trend line as my support. For the current hour, it's at 78. The next hour is going to be at 80. So I'm going to use 80 as a support. And if we start trading below that, I want to be short. So sell at 108.80. My stop, we cannot use 109.97, but we can use this stop. We can say if we start trading above the stop with 1 pip, that's it. So we're going to use 109.74. I know it's a large stop, but again, the yen, the pip value is not quite $10. It's around 9 at current times. So it is okay to push the stop a little more than we do on the euro, for example. Now, my targets, for the drop, of course, for this drop, we do have some support in the 40s. It is very obvious with the bottom of wave 5, wave B, and the 88.6 Fibonacci level. But that is not going to be a very exciting target. Now, because this is a corrective move, we can expect not just breaching these bottoms, but pushing a little bit below them. And the lowest price we have seen here was 40. Maybe 10 pips below that. That will make our target around 50. So target 1 is going to be at 108.30, and target 2 again is going to be 107.87. With these two recommendations, I am ready to place my orders now, guys. First, I want to check. Come on, push. I want the pound to push higher and higher. I really do. I'm keeping my eye on everything. You know, the pound, the euro, gold, yen, and even Canadian dollar. I'm keeping my eye on everything. Let me check on the Canadian, see if we are in or not yet. Not yet. Not yet, guys. We did not trigger our signal. Now, let's go to our QTimeFX live account and place our orders on the dollar yen. As you saw, guys, today we have only sell on the dollar yen. We don't have a buy because honestly, a buy without penetrating 109.72 is not recommended in any way. I really believe that as long as we do not penetrate the recent top we reached, taking long positions can be very risky because the overall direction, the wave count, the internal wave count, and the tops that has been descending, everything is pointing to the downside. And I really recommend only short on the dollar yen today. Let's see if I'm right about this. Tomorrow, of course, we're gonna see if I'm right about it. So, no buy. No. We have a sell limit and a sell stop for today. The sell limit is at 109.21. My stop is going to be 109.93. And my limit, guys, is going to be 108.42. And place. And this is it, guys. Go directly to your QTimeFX live account and place this order, or take a screenshot, copy it, maybe write it down, whatever you like. If you are still trading demo, I don't recommend you trade demo for a long time, but if you are an absolute beginner and you are still trading demo, you can attempt this position on your demo account and see what happens to it. So a sell at 109.21, stop at 109.93, and take profit at 108.42. We do have another sell. What if the price does not go that high? I want to sell at 108.80 with my stop just a little below 100 pips, guys. I'm sorry, I can't do better than this. I'm sorry. 109.74. I know it's not the kind of stuff that we usually use, we usually prefer, but it's still within the limits. I never do 100, you know, up to 99, yeah, 100, no. That's a rule, and you should have rules when you trade. You should always have rules when you trade, guys. I want you to have rules about risk management, rules about getting in and out, rules about the number of trades that you can have in any given time, or rules about how big your stop could be. For me, this is one of the rules I live by. I never place a stop at 100, maximum 99. Usually my preferred area is 60 to 70, and at the same time I don't place it 30 or 35 because that's very close and it's arrogant in my opinion. I don't do that. I give the market some room to move, and then I place my stop away from the entry, 60, 70 pips. But if I have to push it to 90 from time to time, I do. 95 I do, but not 100. So this is one of the rules I live by, and I want to point out that having rules is very, very important. You have your rules, you stick to the rules. For example, William O'Neill, one of the most important people in the industry of financial news and one of the best traders ever, he said that when he bought any stock, no matter what he thinks of the market, if the stock loses 7%, he gets out. That's a rule. So having rules is something that makes you a better trader. It makes you disciplined, which is extremely, extremely needed in trading. So guys, after this lecture about rules, let's go back to our order. 108.30. 108.30. So we have a sell at 108.80. A stop at 109.74 and take profit at 108.30 and place, and we are ready to take advantage of the dollar yen if it starts falling. So with this, guys, we are now positioned to sell the dollar yen if it goes up or if it starts falling immediately. I prefer to sell it at 109.21 to tell you the truth, but of course I'm keeping both orders. And one very important note, guys, when you do follow my recommendations, when I give you two orders in the same direction, for example, here we have two sell orders on the dollar yen, not one buy and one sell, two sell. So they are pointing in the same direction. Both are betting against the dollar with the yen. When we have this kind of situation, please pay attention to your account, and when one of them is triggered, please cancel the other immediately for risk management reasons, not for analysis reasons, but for risk management reasons. You need to cancel them. You need to cancel the second one so you don't have two positions at the same time pointing in the same direction, which doubles your risk. We don't want to do that. Okay, guys, with this, we come to the end of today's webinar, and I cannot believe that we have been talking for 3 hours already. I have enjoyed it very, very much. Just a comment. Jerome, thank you, Jerome. You are welcome, buddy, to join us every day. First time here to copy this position. I hope it will be successful. Me too, buddy. Me too. Which position? Let me know in the comments. And the guys from FX Educast, thank you for introducing me. Munther as a certified market technician, CMT. Yes, I am. And worked in the field for more than 18 years now. Actually, they are almost exactly 19 years because my interview at the first broker I worked for was on December 15th, 2000. It was a Friday. And in my country, Friday is usually off. It's an off day. So they called me on Thursday. They said, you have an interview tomorrow. I said, but tomorrow is Friday. The guy on the line said, yeah, we work on Fridays. I said, whoa, that is strange. So I had this interview, and the next Monday, immediately, they started training us for working in the financial markets. It was not very good training, to tell you the truth. I had to overcome a weak start because of very, very primitive training. And then I depended on myself. Of course, I read a lot of books, and I became a market analyst, a CMT, chartered market technician. I'm very proud of that. So it is 19 years, buddy. FX Educast, it's 19, not 18. So, guys, with this, we come to the end of today's webinar. I have enjoyed it very, very much. And I really hope tomorrow we'll be talking about the profit that these recommendations are making. I really wish you the best, all of you, in all of our recommendations. I really hope we get ourselves a couple of limits today. And we'll be talking about that with Joy tomorrow. Yesterday we had a stop. It's not the end of the world. We had very good results before that, so it's okay. We'll let one slip and we'll hope for the best today. Before I go, guys, I want to remind you that we are having a Telegram group, and we are really interested to having you with us there. Contact us at FX_Educast via Telegram, and you can join our group. The guys from FX Educast will be there to help you with any question you may have about QTime FX, our favorite broker in the whole world, about the $500 promotion that we are having right now. It's really exciting. Everybody's talking about it, or about the account opening process, or about the Telegram group. So I want you guys to focus on the Telegram group. Join us, and we'll be sending these recommendations right to your phone, to your group. Okay, be a part of this group. Everybody is going to get these recommendations. For now, they are free, but I don't think they're going to be free for a long time, unless you, of course, become a client of QTime FX. So thank you for being here. People who were here for the first time, like Jerome, thank you very much for being here. People who have been here every day, like Nick and Michael, I don't want to forget anybody. I have a lot of names here. Thank you for being here day after day, and thank you for believing in me. I will try my best every day to give you the best opportunities in the market on a silver platter. I want you to make money. I want you to be successful in the financial markets, because I know how it is to lose money. My beginning was not very good. It was not very good, I can tell you this. But it happened when I read about even the legends in this market. It's very rare that you hear about somebody who made it from first attempt, because everybody wants in. We want to jump in. We want to be in the financial market, but without enough preparation. And that leads, of course, to failure. Michael Marcus, the legendary trader who turned 30,000, an account of one of his clients was 30,000. He turned it to 80 million. This man who made this miracle happen lost everything he had with his first attempt. He lost his whole account. And then he learned not to do that. And he came back and he became a legend, a living legend, Michael Marcus. Jesse Livermore, the greatest trader who ever lived in history, in my own opinion. This is my opinion. There's nobody like Jesse Livermore. He lost everything when he went to the New York Stock Exchange for the first time. He dropped $10,000. He lost $10,000. He lost everything. He was not able to make money the first time. But then he went back. He studied what went wrong. He perfected his method and came back and became the greatest trader who ever lived. He made $1 billion in one trade, guys. That is something, right? So, if you are a beginner, you are welcome to be with us. If you are experienced, another opinion will not harm you, even if you have your own experience about the market. Listen to what other people say, like me, for example. Maybe there's a support or resistance you're not paying enough attention to, and on the chart here, you see it and say, oh yeah, this is a support, or this is a resistance that I can use in today's trading. You are all welcome. I'm really happy to be with you guys, everybody, for another day. And of course, we're going to meet again tomorrow for the last time this week before the weekend. So join that group, guys. I want you to join that group so you get our recommendations fast and easy to your mobile. We also, aside from our Telegram, FX_Educast via Telegram, we also have a WhatsApp at this number. It's in the chat. You can see it. 82 10 63 24 0219. So WhatsApp us at this number. Contact us at our Telegram account, or join us here in the chat with any question you may have. And I assure you, the guys from FX Educast will be very, very happy to help you. Okay, guys, with this, we come to the end of yet another day. My best wishes to you. We have a promise to meet 21 hours from now, again tomorrow, for 3 hours of market excitement. And I want you to be excited today. I want you to make profit so we can talk about it tomorrow and enjoy every minute of the last day before we head to our weekends and enjoy our time away from the market. Okay, people, finally, a huge thank you to my favorite broker in the whole world, QTime FX. This live stream was sponsored by QTime FX, guys. You can trade with a maximum leverage of 500 to 1 with the broker who got the award for the lowest forex spread of 2018 by the ACIFMA, and that is very, very nice. That's very good. Now you can imagine yourself trade the euro with a spread of only 4/10 of a pip, and honestly, yesterday when I was trading, I even saw lower than that. I saw 3/10 of a pip on the euro dollar with my own eyes, guys. I'm a witness to that. So these spreads are amazing to trade. 0.4 on the dollar yen, and of course with zero commission, because if we give you these very tight spreads with commission, then that's not a huge advantage. But QTime FX wants you to have that huge advantage of trading with the lowest trading cost possible. And that includes, of course, very tight spreads and zero commission. So come trade with us, enjoy these spreads, and of course with no commission whatsoever. And to feel good about your funds, of course, rest assured that they are segregated in UOB, which is ranked in the 22nd place in the whole world, guys, in the World Bank ranking. And that is something very, very fantastic. Now, our promotion, which everybody is talking about, is, of course, the $500 promotion. Open a VIP account with QTime FX with a minimum deposit of $150 and get yourself some fat bonus of 500 green American real dollars, which you can withdraw. You can withdraw, guys, and this is the most important part. It's not a trading credit. You can withdraw the $500 and go spend them in any way you like. I always say this: take the missus out for a nice romantic evening. She's gonna love that, and she's gonna admire you for getting $500 out of nowhere, just a bonus for you because you opened your account with QTime FX. Or take her away for a weekend to a resort, a spa, a hotel for a day or two, and spend that money and come back on Monday feeling refreshed. Or you can go and buy, if you don't have a missus, lucky you, you can go out and buy that gadget that you have been looking at, anything you like, anything you have in mind. Just come and get the money. Please take our money. Get the money, spend it in any way you like, and tell others that you got your bonus. You withdraw your bonus when you opened your account with QTime FX, our favorite forex broker in the whole world. Now you can deposit only $150, guys, and get yourself $250 in bonus. Or you can deposit $300 and get yourself $500 of bonus. And this is the bonus I want you to aim for. Not the 250, but the 500. But there's a very important note. To get these promotional benefits, guys, what you need to do is you need to contact FX Educast, because we are offering you these fantastic promotional benefits. So contact us at FX_Educast via Telegram, and I assure you the most professional, the most friendly team in the world will be there to help you with big smiles on their faces. Don't hesitate to contact us now. Open your account now and directly deposit. And check back this video. Of course, it's going to be on YouTube on our channel. Check it back and take these recommendations, place them in your account, and let's make some money. Okay, guys, with this, I'm going to leave you for today with a promise to meet again in 21 hours. And as I always finish, good trading and good luck. Bye-bye, guys.